Chuck Carnavan. I'm the Chuck in the Markets Up Chuck. And today's blog was just about titled Fundamentals Reveal a Lot. And all I really wanted to do here today is simply focus on what you can learn by looking at fundamentals. So in the first couple of examples, I'm going to pick some companies that you may or may not be familiar with. But here's Federal Signal. I want you to look at a 15-year history of this company. What you see here are the earnings per share of the company plotted against their stock price over the last 15 years. And my whole point, all I want you to get from this is, look at this picture and what does it immediately tell you about being a long-term investor in this company? Is this the kind of company you would want to buy and hold? Is this the kind of company that's generating, strong earnings growth over time? Can you really rely on what the earnings growth of this company were going to be? And all I'm getting at here is, as an investor, you can simply look at this company and instantaneously, from a fundamental perspective that is, and instantaneously be able to learn an awful lot almost immediately at a glance. My next example is FEI company. It's actually a company that's involved in nanotechnology. Again, you might not know very much about it, but by very simply looking at its 15-year history from a standpoint of its fundamentals, its earnings per share, you can see very clearly that this company's had very inconsistent earnings up till now. Does that mean they can't grow in the future? No. The point is, though, is by looking at this picture and looking at how the fundamentals work with this company, you can clearly see that there is a long-term relationship between earnings and market price. But more importantly, you can get a feel for how well the company has performed as a business, and that tells you volumes of what you might want to know about this business. Or if you look at a company like Jack Henry, and what I really want you focusing on are the fundamentals. Look how consistently this company has grown. There's been little periods of lumpiness, but when I look at this picture and I see the company has no debt in the balance sheet, and I just look at the fundamentals, this is the type of company that might interest me in wanting to know more. Now, stock price action has been kind of crazy over the years, but clearly there's a long-term correlation between stock price and earnings. But what I really wanted you to focus on, and what I really want you to focus on for today's post, is look what the fundamentals of the company, have been able to produce. And then, of course, guess what? When you look at what the returns to the shareholders have been over that time, you'll see that they've been very extraordinary relative to the market. If you go back and look at companies like we just looked at that were less consistent, like FEI Corporation, you will see that you have a totally different picture in terms of results for shareholders because the operating results have been so inconsistent. Now I'd like to kind of move into a comparison. I'm comparing companies that are, in similar industries or certainly compete across different businesses. So, for example, we look at a company I've shown here. Look at Danaher. Look how consistently the company has grown earnings year after year after year. And then let's look at it in the light of one of its competitors. When you compare Danaher to Keithley Instruments, again, similar businesses, similar industry, you obviously see a company that's had no earnings growth here, and you have to ask yourself, is this the kind of company you want to be a long-term investor in? And by instantly looking at the fundamentals here, my point that I'm trying to make today is you have the answer to that question. My next comparison here, let's look at Johnson & Johnson. Look how consistently Johnson & Johnson has grown earnings at over 12.7% a year, year after year after year. And obviously a very well-known company with a very consistent earnings record. Now let's compare Johnson & Johnson to Boston Scientific. I want you to see a very erratic earnings. You had a big bubble of earnings right here. This one, the stent business, got kind of hot. And then earnings have really fallen off of late. But clearly, just by looking at this picture, when you compare this to Johnson & Johnson, you get a very different perspective instantaneously about what kind of company you're looking at. Then finally, let's take a look at a comparison of a couple of companies in the consumer non-durables business. Colgate-Palmolive, clearly well known. Look how consistently Colgate-Palmolive has grown earnings at over 11.6%. I mean, just looking at this picture, I get a very calming effect. I feel like if I owned this company as a shareholder, as long as I kept my valuations, in line and paid attention to what, how my valuations were, I could be very, very comfortable owning a company like this for a long, long period of time because I know I have a quality company with a decent dividend and very consistent earnings. If I compared Colgate-Palmolive, for example, to Elizabeth Arden, another very, very well-known company, you can see, that Elizabeth Arden has been very, very inconsistent, relative to its earnings growth over exactly the same 15-year period. So I would obviously be much calmer owning, Colgate-Palmolive than I would Elizabeth Arden. But I do want to make a point as I'm showing this picture. You have an awful lot of price volatility. That doesn't mean that there aren't times, for example, you could have bought Elizabeth Arden here when they had no earnings at $8.37 a share in September of 2000 and watched it go all the way up to $24 by June of 2001. And that's kind of inexplicable to me. But then, of course, it didn't last. If you weren't real careful, the price would have fallen below your original $8 cost basis down to $7 by the end of the year. because it was, again, very unreliable. So the whole point here is that one of the things about looking at companies from a historical perspective and seeing how well the stock has been managed, how well the business has been managed, can give you a lot of insight into what type of position you want to take with the company. Do you want to be a trader or do you want to be a long-term investor? Of course, I'm oriented to long-term investing, so I kind of like that idea better. So I'm always looking for companies that give me that consistent year-over-year earnings growth, because I think in the long run I'm going to be better served. All I then do is make sure that I buy these companies when they're reasonably priced. It's been Chuck Carver. I hope you enjoyed today's post. I look forward to talking to you again tomorrow. Thanks for listening.